And changing gears, China's slowing economy is changing the way it trades with the world. As it opens up its domestic market further to friendly partners such as South Africa, it's also fueling an unprecedented drive by Chinese companies to expand beyond its borders. And CNA senior China editor and senior correspondent Olivia Siong reports.
For the past decade, 34-year-old Olivia Siong has been exporting South African fruit to markets around the world. But one destination has remained difficult to break into.
We do business in China, but more on an ad hoc basis.
He hopes that's about to change. Since May, China has implemented zero tariffs for imports from African countries with which it has diplomatic ties.
A big market like China, the more people that have the ability to buy the product means the more we can send there. And especially with our competitors in the Southern Hemisphere who export fruit to China with lower duties or no duties, again, having a better priced product there is definitely going to be to our advantage.
But for exporters like Mr. Siong, lower tariffs are only part of the equation.
The spec that China requires is more of a premium spec, so getting our hands on the China spec has been a little bit harder. The second reason is some of the protocols that China requires, let's take citrus for example, is they require sterilization on their fruit. It's an extra step, it's an extra cost, and that also affects our ability to export bigger volumes into China.
Those are exactly the kind of barriers that Beijing and Pretoria are now trying to tackle. Earlier this year, China and South Africa signed a framework trade agreement, followed by other deals aimed at aligning rules and standards. Analysts say these reflect a broader shift in China's economic relationship with South Africa.
It reflects China's own experience in terms of its own development. Remember that China initially focused very much domestically on investment, infrastructure, and it's changing now to what they call high-quality growth, more emphasis on technology. And so in a certain kind of way, that is mirrored in the relationship China has, with Africa.
And deep beneath the surface at this mine in South Africa's Limpopo province, that shift is beginning to take shape.
And this is the final product. This black powder, which holding it in my hands feels so much like sand, but really this is chrome concentrate, which then gets trucked from the mine here via Johannesburg to the port in Durban before it gets shipped out to the world.
For decades, China's role here was largely that of a buyer. Today, it's increasingly becoming a key player in the mining supply chain. Heavy equipment maker Sani is one example, moving beyond exporting machinery to assembling it inside South Africa.
我们前期的话，基本上是做贸易，把我们中国的这个设备，在中国生产制造的设备带到南非来。其实我们是想的，在当地能够进行一个组装制造，包括我们这工厂，其实我们的设计的目的就是每年能够有1000台设备的一个在当地的组装这样的一个情况，带动当地的一个就业情况。
It's exactly the kind of investment South Africa wants more of, creating jobs, transferring technology, and building local industries, including in traditional export industries like raw materials.
What Africa is saying, it is time for us to consider also localizing value addition, make sure that the midstream processing happens closer to source, closer to the mines. There are opportunities to partner on infrastructure, on energy, as well as on skills development and capacity building.
The last wave of Chinese investment was driven by the need to feed China's relentless appetite for growth at home. Today's push is born of a cooling economy, and how that reshapes economies like South Africa's is a story that's only just beginning. Olivia Siong, CNA, South Africa.